Hey, hey, hey.
Hey, what's going on, Ken? What's happening, brother?
Happy Friday. Nothing
Happy
much other than
Friday, happy
having
Friday, absolutely.
internet issues. Everything's fine. Swear to
We're
God,
ready
there's
to go,
always
and then out of
something.
nowhere, just disappear, right?
Whoop,
Oh man.
gone. Ugh, gotta love
So how's it?
Spectrum in
How's
North
your
Carolina.
how's your week been, man?
It's been good, man. Went by fast. Like when you're busy, it's fast, right? So I feel like it was literally like last Friday when we were on this. Like it felt like that was like 2 days ago. So it's been crazy.
I know, man. It's been it's been a quick, it's been a really quick week, man. And obviously, we're gonna get into it, but there's been a lot of changes this week. But yeah, we're getting into it in a minute. Just everyone, thank you for joining us. REI Happy Hour every single Friday at 5 p.m. Myself, Danny Campos from Campos Capital Group, here at the Atlanta office, next to my man.
Ken Board, senior loan officer. I'm in Charlotte, North Carolina. Not too far from Danny, but three,
That's
four
right,
hours.
4 5 hours away, not too far
Well, the
away.
way I drive, 4 hours.
Me with the kids, 6 hours. So yeah, but thanks everybody for joining us. Every single Friday we get on here just to bug out, have a good time, have a drink, and talk about some real estate. And especially this week has been kind of crazy with a lot of the news coming out on the media and things that are happening in the government. The financing world is just a lot. So obviously, is that going to affect real estate? Of course it will. So we're going to get a little bit into that. Before we get into that, though, we want to obviously have everyone to please share the live for us, to your friends and family, to the different investment groups you're in. It's going to be a really good hot topic we're going to talk about today. So we want to definitely make sure everybody takes advantage of all the good stuff we're about to bring out for you guys. In addition to that, please comment where you listening from. What city and state you're in. What kind of deal have you got done this week? We love to hear all the experiences of people who have been moving in real estate this whole week. So please share the good news with us. And even if it's some bad experiences, we love to know how you guys are dealing with it. And obviously, this is going to help out the community a lot more. But Ken, you want to get us started with a few events we have coming up? I know you have one coming up tomorrow, right?
Yeah, so we're excited. We're sponsoring a great event tomorrow in Wilmington, North Carolina. So if you are in the surrounding areas or don't mind taking a little trip over to Wilmington, North Carolina, come join us. It's a free event. The venue is at the USS North Carolina, which is the battleship. So that's cool in itself, right? And it's going to be on the battleship, so you'll have exclusive access to the USS North Carolina, which is cool. Um, there's going to be raffles with Airbnb stay giveaways, memberships, and more. Keynote speakers. So there's going to be a lot to learn, inspiration, education, networking. So it's going to be a good event. It's from 1 to 6 tomorrow. So make your way over. I think it's worth it. And it's for a great cause too. So I think we like the event no matter what, but this really made us want to sponsor it, and because we are a veteran-owned company, and this the cause is for Home for Heroes. So pretty much what that is so all your service members, but not just service members, first responders, healthcare professionals, teachers. So all of that will go to, so your participation, I can't speak, will go to that. So definitely come on out. It'll be a good time. You'll meet new people, learn some things, and build your network up. So it'll be food and refreshments. So come on out. So yeah, that's tomorrow from 1 to 6.
Nice. Good stuff, man. I just also let everyone know about the Spanish speaking event we have coming up on the 14th of October in Charlotte, next to the I Am Legacy team. They, like they do every single year, set up these events for all the investors. Come to look at a real nice panel of speakers that are gonna dedicate some time to everyone in regards to the different strategies in investing. So, Charlotte, October 14th, mark it on your calendars. Hit us up for tickets. We actually have some 10% discounts on tickets. So make sure to get your tickets soon before they sell out. Nice.
Yeah.
I think that's all of the events, right?
Yeah.
Yeah.
That's it
Okay,
for
cool.
now.
Actually, I have one tonight. I'm so excited, man. Like, got invited to this gala for Root Hill Properties. Huge firm here in Atlanta, and they have their 2-year anniversary that they're celebrating tonight. And so I'll be at the gala tonight to be able to
Nice.
mingle, network, and have a drink or so.
Yeah.
So, but hey, I think this comes down to the next part of our drinking of the night. our next drinking part of the night. Okay, go ahead, brother.
So yeah, my favorite part, which I say every time, we call it REI happy hour for a reason, right? So
Right.
we're gonna share what we're drinking. I'm keeping it really simple this week. No
Okay.
special cocktail. I'm just doing a good old light Michelob Ultra.
Nice. Keep it
Skinny
nice and
can.
light.
Yeah, I'm only having one tonight. Got to do some stuff, so not really doing it. So I had to go really light tonight. So
not going too crazy, right?
mm-mm.
I get you. So actually, I'm going even worse.
Oh God, what could be worse?
So this whole week, many people already know, but I'm going on a cruise in a week. So, my wife has just been like killing me this week in regards to a diet, trying to lose some weight for the cruise, and it's so bad. It's a liquid diet. I haven't eaten solid food for 5 days.
What?
It's crazy. I mean, I lost 10 pounds already, which is pretty wild.
Yeah,
but I've been so hungry for 5 days. So it's a club soda.
Oh wow, no.
But I made it look a little fancy though, so I'm not even touching liquor today. I'm waiting actually for tonight to at least have one drink, and probably I'll make it a vodka with club or something.
Yeah, we're being boring today.
I know.
Probably,
it's pretty bad.
Probably good that we're being so conservative today, especially with the topic, right?
Exactly. Actually, we should be really drinking at this point.
Oh, that's
what
true.
The topic is, but but yeah, we actually are keeping it conservative. So as you guys have heard already over the news, for the past week, actually past couple weeks, rates are going up again. We actually been really happy, and it's been a nice smooth. It's been like a nice sailing smooth trip down since July, I believe, if I'm not wrong.
Yeah, it's kind of platflow. I can't speak. It plateaued and just being consistent.
Right. It has been, and it's been nice. It's been nice, but things have changed. Feds are like, oh, we're doing it again. And so they did, and they this time they weren't playing. Being that the case, there's always ways to try to go, to try to stay ahead of the game and still make it through, right? So we're gonna talk a little bit about that, but I know Ken, you wanted to present something, correct?
Yeah, we have a little clip just from Fox Business News. It's pretty quick. It's like 5 minutes long or whatever, but just want to kind of you guys get a feel of what they're talking about out there, and then Danny and I will come back after and discuss it. So Natalie, if you could go ahead and put that up so we could show everybody, that'd be great.
Hitting a decline at the start of trading this morning. Dow Industrials down 160, Nasdaq down 120, S&P down 28 after the Federal Reserve paused the rate hikes yesterday. Federal Reserve Chairman Jay Powell said that the Fed is still looking to bring inflation down to a 2% target. Watch this.
We're prepared to raise rates further if appropriate, and we intend to hold policy at a restrictive level until we're confident that inflation is moving down sustainably toward our objective. In determining the extent of additional policy firming that may be appropriate to return inflation to 2% over time.
Joining me right now is Amerivet Securities head of U.S. rates, Greg Farinello. Greg, good to see you. Your reaction to the Fed yesterday?
Good morning, Maria. So largely as expected for us, obviously the market was not expecting the Fed to move on rates, which they didn't. We'll call it a pause, maybe a skip. So let's talk about what they did do, right? So if you look at the projections, first of all, if you look at the overall summary of economic projections for the quarter, it was kind of interesting in our view, right? They raised their GDP forecast, so they're saying the economy is going to be doing better. They have the unemployment rate going up, but they lowered that rate relative to June. So they have that now at 4.1. So the chair is saying that that natural rate of unemployment is actually lower post-pandemic. They have inflation coming down to target by 2025, and they have interest rates coming down over time. So it sounds like this grand scenario that we all wish would pan out, but in some ways the numbers don't necessarily make sense. And then in conjunction with that, I think bigger what they've done for the market short term, and in particular with the rate market, the rate cuts that they had priced in to 2024 and 2025, they lessened those cuts. So they still have rates coming down, but now instead of 100 basis points in 2024, they have 50 basis points. And in conjunction with that, we've seen the Treasury market reprice after the Fed meeting and into this morning.
Yeah, it sounds like those rate cuts aren't happening until well into the end of the year next year. Mark Tepper, you agree with that? Jump in here.
I do. And Greg, I want to talk about how, the Fed meeting yesterday and some of their expectations are actually going to impact the consumer, because this higher for longer theme seems to be real. I mean, they're not expecting the Fed funds rate to drop below 3% until at least 2026. The long-term target is 2.5%. And I think the biggest thing consumers need to come to terms with is that we're not going back to that 0% interest rate environment that we had for roughly 13 years. That may never come back, at least for the very foreseeable future. And as Americans, we have become addicted to a lifestyle that involves us living off cheap debt, being able to get a 3% mortgage. And I've talked to people who have 7% mortgages. Maybe they went adjustable rate so they could save a little money. They intend on refinancing once mortgage rates come back down to 3 to 4%. But I don't see that happening anytime in the future. What's your take, Greg?
Yeah, good morning, Mark. Those are all great points, and I agree. Investors, consumers need to come to terms with the fact that this rate structure may have changed, maybe not forever, but certainly may have changed for a long period of time. It's funny. I was talking to someone recently who was in the housing market, in the market to buy a house, and certainly of the younger generation. And he said, Greg, look, all I know are zero interest rates. I don't know anything else. So when I look at these mortgage rates, it's a little bit of sticker shock. So, higher for longer is definitely a powerful theme. My view, and we've been writing to clients, and look, the Fed may disagree. They've got, these fancy studies that they do in terms of lags of monetary policy. I'm not too sure how you feel, Mark, but I don't think we have fully felt the impact of these rate increases yet.
Yeah.
And I think if you look at when the Fed really, call it, hit the gas on these increases, it was last summer. So those increases are still flowing through. And then we could talk about, commercial real estate, resets on residential ARMs. We could talk about all this Treasury debt that we're issuing that's coming due. We're going from 1 to 1.5 coupons now. We're going to 5% coupons. I mean, all this stuff, I think, is going to ultimately bite. And that's what will prompt the Fed to lower interest rates.
Yeah.
But and even at that, though, they don't necessarily, this doesn't mean, and to your point, Mark, it doesn't mean the Fed is coming back down to zero. We could lower interest rates and still be high at 3.5%, 4%.
Yeah, for sure. And, Bob Nardelli made the point that you're making last week on this program, whereas some of the middle market companies that he's invested in, they've seen their interest payments go from $2 million to $14 million because they're now feeling the impact of those higher rates. So I agree. We haven't felt the full impact. Layer on top of that, a UAW strike enters day 7 today. Stellantis and General Motors laying off more than 2,000 workers. That announcement
All right, that's
yesterday.
good. We can
after Stellantis
stop it now.
cut 300.
Thank you, Nat. Yeah, so
Big,
sounds really depressing, right?
Hey, man, you know what? This is where I'm. When you hear things like these, when you hear news like this, is when you have to only the strong will continue. Only the strong will actually survive it, right? And I don't think I don't want to put it as a survival either, because it's not like it's gonna be a complete shutdown of the economy. It's nothing like that. It's just the way of strategizing, the way of adapting to the new rates. But you need to look at the reality of it. That's it. You know.
Yeah, it's definitely. And I think, okay, so obviously we real estate in a whole is big, right? So it can be very scary. I think more on the consumer side. So first home buyers, things like that, you know, they're the ones that are going to really feel the sticker shock. Obviously, we deal mostly, you know, with investors. So right. I think you can look at this with glass half full, right? And I think a lot of investors, especially experienced investors, have gone through this because maybe they've been doing it for 30 years. There's a lot of things you could do out there. And the rates might be up, but guess what that does? That as an investor, your competition's probably going to be less. So you're not going to have as many first-time home buyers. You're not going to have people competing over houses. So there's going to be more inventory for you. There might be houses sitting on the market longer that you can actually wheel and deal and get the price down more, where you know you're getting it for a better value, right? So, and yeah, are the rates high? If you plan on holding, which is honestly what I would recommend at this point, because I think sales are going to drop. So I'm not saying you can't fix and flip. You just got to know your market, where you live or where you're investing. Because I think there's going to be pockets of markets that are not going to feel that much of an impact. Like I'm in Charlotte. There's 80 families moving here a day. It hasn't slowed down. Like this market, I don't think is going to feel it as a lot. But that's not the whole country. So it just depends on where you are. But I think you really have to reconsider what your exit strategy is. If you've been flipping all these years, this might be the time to maybe reconsider that, or at least have it as a second, a backup plan in case you can't sell it. So that means when you're analyzing a deal before you commit to it, you should be analyzing both the fix and flip and the long-term hold to see what it looks like. So, you know, us being in the finance side of everything, you know, we're always considering that, right? We're used to it. But an investor, you know, they might be, if they're just fix and flippers, you know, they might just be, all they care about is, you know, getting that house, fixing it, selling it. They're not looking at the long-term side of it. So really, my recommendation, especially on the finance side, is to look at both when you're looking at homes at this point, because yeah, you know, the cash flow on that home might not be that great compared to what maybe your other investor friends, or if you have done holds, maybe you were getting $1,000 a month in cash flow. It might only be $250 now, but that shouldn't stop you from buying that house, because the value of that house is most likely still going to go up, right? So there's still a lot. And then obviously the rates will eventually come down where you can refi it and do that. So I still think it's worth it. And I think experienced investors know that, and they're not going to stop. If anything, they might speed it up because they don't have the competition. They're not going through as much. So they might even speed it up more. But yeah, that's kind of like my overview of it, and kind of like my basic thoughts.
Yeah, absolutely, man. And you know what? Whoever's listening right now and is listening live to this video, and whoever's gonna click on it, and you know, after we post it up, to listen to this video, you guys are the ones that are wanting to know what you need to do to continue in this game. The ones that are going to be like, oh, forget it, I'm done. Those are the ones that are just, they're not going to get it. They're done investing. That's it. You know, they're looking at this the wrong way. You know, as opposed to everyone who's looking into, okay, rates are going up. Okay, what I need to do now with my investment properties that I'm purchasing now, the ones that I'm going to purchase in the future, or I'm going to prepare to purchase in the future. Those are the ones that are going to stay alive, right? So it just has a lot to do with your mentality on how you're gonna see the future in investing, right? For the next couple of months, maybe year, right? So many people are right now who are going into these properties. Your mentality needs to be like, what is my strategy? Gonna be different from what I'm used to, right? You know, if I'm used to fix and flip, all right, what's going to be my plan B? What's going to be my plan C, right? And like you said, looking into your market. And it's just strategize, you know, being, changing your strategy, adapting to the market, adapting to the rates, and finding a solution for it. And I think that's the reason why we're on here, right?
Yeah.
Because we can cry about the rates, but that's not going to do anything about growing your business. And reality is finding a solution, finding different loan programs that are going to work for you, and making sure that that's going to be the way that's going to help you continue. But not only that, being able to win more than anybody else, because there's going to a lot of people are going to just drop out of the
Yep.
business, and only the ones that are just ready to keep going and ready to change, they're the ones that are going to really we're going to see a lot of success in those people.
No, I
So
think so. I think so.
yeah.
Definitely.
So, and I mean, I think there's looking at how everything is shifting, right? How do you think that's going to affect the rental market?
Oh, I mean, people aren't going to be buying as much. I don't think, other than maybe, like I said, we said investors. So like those first home buyers might hold off. So guess what they're going to be doing? They're going to be renting. So yeah, the rates might be high, but I think demand on rent is going to go up. So what does that mean? That means the cost of rent is going to go up. So that is beneficial to an investor, right? Especially if you're holding. So I think in a lot of ways, it's actually good for an investor to really consider holds if they haven't before. And the ones that only do holds, I think they're just going to do really well the next like 2 years. I think it's going to be something where, because they're experienced, they know what to look at, they know the numbers, they know their markets, and I think they're going to really thrive in this high interest market, because rents are just going to go higher. I mean, they already were going higher, right? When these rates first went up, when we were doing, now I'm speaking on the hard money side, when they were not that long ago, they were in the low sevens, right? But when that first happened, you saw the rental market started to go up. Even the prices started to go up, everything, because people were scared. They were going from 3%, things within a few months, things were up to 7%, and people were just like, they didn't know what to do. And it's going to happen again, especially when the news really hits that like things aren't changing. The rates are going to probably go up a few more times. We don't know where they'll end. So yeah, I think you got to be creative in a lot of ways. I think if Danny and I, you can always call us for advice. But like if you already have someone, call them and ask them like the creative ways to structure a loan, because there are different things to do. Everyone's used to, especially long term, people are used to doing just a straight like principal interest, 30-year DSCR loan, right? To maybe help with those margins and that cash flow, you might want to consider like a 10-year interest only, right? On that first 30 year, on that 30-year loan, the first 10 years being interest only. So there's different things out, or 5 years. So there's a lot of things out there. And then I would also, and I've already been doing this with my clients, and Danny, I know you have too. Like, I will always recommend a 3-year prepay at this point. I don't think it's doing justice to my clients unless there's no option. I mean, sometimes there's no option, but if there is an option, I am always going to consider telling them and recommending a 3-year prepay, because rates I think are going to change. But like they said on that news clip that we watched, you're looking at 2005, right? 2006, I think they said, somewhere around, or somewhere around there, about 2 years from now. After all the elections, put it that way, right? Everything's going to change after everyone knows what's going on. But I think at that point, which is if you're in a 3-year prepay, it's going to give you that flexibility to refinance quicker without penalties or larger fees. Will your interest rate be a little bit higher right now? Yeah, it's not. I'm going to tell you right now, it's not that much difference. But I know things are going to seem really tight with the rates being so high. So I think a lot of people are going to be desperate to get as low, every little point is going to help. But I think, consider shorter prepayment penalties. Yeah. Look at different options when it comes to the loan and the way it's structured. And I think that will help, or at least cushion the effects of the higher rates.
Absolutely. And one thing is very important to mention is that when you're looking at a property, obviously you want to analyze the numbers, right? Analyzing the numbers to making sure and now is very critical. The time to be very diligent with vetting the property, making sure that all the numbers look right, making sure that this property, if I'm going to get that market rent, right? If I'm gonna I want to make sure I get that value on that property. I want to make sure that I don't put too much into the property to then have a higher loan amount to have to pay back. Right? All these different factors needs to be considered when you're looking at a property, when you're vetting a property. Now, once you have it, once you got the numbers, just don't think that you need to have $500 cash flow to be able to have a good rental property. You don't. Right now, how things are, you be happy with $150, $180 of rent of cash flow. You know, be happy with that. Because right now it's the truth. The reality is we're going to be in this market of higher rates. So having that cash flow, you're winning. No matter what, you're winning. As much as, like you said, you would think, oh, but the neighbor next to me, or my mentor told me that if I have $600 cash flow plus, and then I have myself a good property. Well, right now that's not the case. So if you at least are in the positive, then you're good. Again, you have a property that you're not paying out of pocket from. You have a property that's increasing in value every year.
Yep.
Right. So, and then you have a property that you already know you're going to be winning for the fact that rent went up. In 3 years, you refinance into a lower rate. Now your cash flow just went from what you thought was going to be $600 to maybe now $700-800. Right. So right now, stick with your $200 cash flow. It's in the long run, it's gonna work out for you. It's gonna work out for you. And I think it's very very important. It has a lot to do with your mind. You think constantly about the present, when in this case you need to think about the future. And that in the long term, a success you're gonna have with these rental properties. So
exactly.
Just a little bit of food for thought for everyone. If you just got here, if you just logged in with us, we're talking about rates. Rates went up. The feds are really cranking down on like they said, right, putting their foot on the pedal on these rates to go up, and don't think that it's going to stop. It's going to increase. So it's very important for everyone to be very diligent with your numbers, vet your properties, and make sure to call us for what options are available, because there's a lot of loan programs options available. It's just finding out, sitting down with your loan officer, sitting down, to make sure to find out what programs and options are available, and just allow us to be creative with it. And please believe us when we tell you things,
Exactly.
Somebody, I don't know if this happened to you, but we get clients telling us, no, I'll be good for the next year. Let me just try to get an extension, or, let me try to see if I can let me wait 3 months to refinance. Don't do it,
Yeah, don't.
Listen to what's happening,
Especially if you're an investor and you're relying on a DSCR loan or something like that. If your margins aren't there, you're not going to get the loan. Yeah. So that means you're going to have to bring more money to the table. You're probably not going to get cash out. And that's another thing too. Cash out is going to become more difficult. Like, there's going to be a lot of things. You should be happy. You got to kind of have the mindset that, like, don't look for those big numbers, right? Don't look. Sometimes be just happy you break even. And what I mean by that, if you can get a rate in term on a refi, I know a lot of people do the BRRRR method because they want to get that cash out and they want to move to the next deal. But you have to be satisfied. As long as you could get that refi, even if you don't get any money back, that should be a win in this market. So everyone's just kind of have to change their mentality. We've been so used and so blessed for the last, I know they said 13 years on the thing, but I mean, I feel like, ever since really 2008 when everything, all the bad stuff happened. But I mean, we've been blessed with rates. We've been blessed with all this stuff. And, it was just a matter of time that it was going to change. And it's happening now. We're trying to level out the market. The government's trying to level out the market, slow down inflation. They're trying to do a couple things. I don't know. I don't think they're going to get to 2%. I think that's That's crazy. I mean, we're at what, like 8% inflation, 7-8% right now. So I don't think we're gonna get to 2, even with doing this. But I mean, I think it might bring it down a little bit just because the demand is gonna slow and stuff on purchasing a lot of different things out there. But you just gotta have to change your mentality.
Yeah.
So change it to be like, okay, I might not see all the zeros behind everything, but you should be happy as long as you're in the positive or you break even on a deal. The real estate game is long term. It's not short term. Everything's not a fix and flip. Everything's not a fix and flip.
Exactly.
The really experienced, successful real estate investors out there, they play it for the long term. That's why you'll see a lot of them. If you go speak to them, there's investors out there that they will take on do a sub 2 deal, and they'll take on a negative mortgage where they have to pay out of pocket a couple $100. But it's better than doing a down payment. Like, they get it because they're in it for the long term. That's what you're going to have to do when it comes to these rates, and listen to your loan officers. If they tell you it's time to refi before rates go too high, and because they know that it might not be possible, or you're not going to get that 75%, or you might not get that 8%. You might only get 70%. Meaning you got to bring more money out of pocket. So listen to your loan officers, especially in a market like this. It's changing so much so often.
Absolutely. Yeah.
And the last thing I'll say is, pivoting a little bit, is I know I mentioned it earlier, and Dan, you brought it up a tiny bit too, is like, just do your research. Like comps are that more important. And when I mean comps, I mean your market rents, like getting accurate market rents, getting doing your research on materials. As we know, inflation is high. Like, you need to know how much everything's going to cost on your scope of work. You need to be that much more diligent on your scope of work. Like, you need to really pay attention to all the little things, and just be that more diligent in all your numbers to make sure, because things are going to be tighter. So you don't want to have a big mistake on numbers, because it could really hurt in this environment.
Yeah, absolutely. So that's what it is. We need now I need a whiskey.
Yeah. Shot of tequila.
Nah, man. I really think it's gonna be fun for the next couple months.
I think it is. I think it's we all like challenges.
Yeah, absolutely. We have to get real creative. We're gonna learn. We're gonna see a lot from the big investors, experienced investors that are gonna be moving strong on the business for the next couple months. So I'm excited to see all that. Nat, if you could put the comment that Pedro put, that'll be so we can read it real quick. I think this is key for all investors. And while she puts that on the screen, being creative and having an open mind for different programs is going to be very important for an investor. So, and that's very true, so keep that in mind, people. Again, we are here for you guys. For any type of advice you need, even if it's not that you need a loan for it, any advice in investing in real estate, let us know. We are on top of the market. We're on top of how it's moving. So we would love to at least guide you guys as best as possible to what could be your next solution or strategy for the market winning right now. So thank you, everybody, for listening in. Again, REI Happy Hour every single Friday, 5 p.m. We just get on here to bug out, just talk some real estate and have a drink. Thank you guys for joining us on this Friday. Again, big things happening, but we're on top of it, and we want to make sure that you guys are on top of it as well. Ken, any last words?
No, we said it all. I think we said what we had to say today.
Cool. Perfect.
All right,
everybody.
Man. Everyone have a great weekend.
Enjoy.